All right, thank you, Madison. Choosing investments is the beginning of your work as an investor. You will also need to understand and monitor the performance of these investments. So joining me right now over Skype to explain is President of Wilsey Asset Management, Brent Wilsey. Good morning to you, Brent.
Good morning, Liz. How you doing?
I'm doing well. What kind of
Good.
investments are we talking about? Are we talking about like retirement investments, or are we talking about, playing the stock market right now, or both?
We're talking about everything. Your regular investments, your 401k, your IRA, and I kind of call this fun with numbers, what I actually call it. And Mike Tyson had a great quote where he said, everyone has a plan till they get punched in the face. And this year, investors really got punched in the face pretty hard. So what I'm telling people, do not make a rash decision about your performance, because not just knowing the return is enough, you have to understand that return. What am I talking about here? The long-term performance. You might say, well, gosh, my annual return now is only 5%. That's terrible. I better sell and go out and try to find something else. What they don't understand is compounding. When you have, out of, we'll say, a 7-year period, you have a down year in that 7th year, and a dramatic down year of 10, 15%, your whole compound return will drop. What you need to do is understand where those numbers come from and how it came about, because again, that larger dollar amount at the end of the period, which we're in now, is going to bring down the performance. And also, too, Liz, what people don't understand, you had like 3, 4 great years. This is great. I'm going to add money to the portfolio. You've now brought up the principal and the amount of the portfolio. A negative return will make a return look even worse. So I explain to people. Yeah, go ahead.
I sorry to interrupt you. I just wanted to interject and ask you, why does long-term performance look so low right now?
And it's because of the fact that when you have a compounding number, so, and again, you have like, we'll say 7 years, and you had like, some good years. I'm going to go over some years, try to give you a better example, but to answer your question, so you have a negative return on the last year. So say you went to $200,000 from $100,000. So a 10% return of $200,000 is going to be a decline of $20,000 versus a 10% return of $100,000 of $10,000. So while your investment returns will increase, it also works on the other side too when you have a negative return. What people cannot do is base their performance on that. Let me try to give an example on a yearly basis. What scares people? I just did a $100,000 investment. Doesn't matter if it's an investment or 401k, IRA. 2013, wow, you're in $100,000. You did 23.5%, 123,500. 2014, you did 9.7%. 2015, not so good. Now you went down to 126,808. 2016, you did 10.2, 139,000. You might be saying, well, gosh, it's been 4 years. I've only made $39,000, or from 2013, only made about 15,000. And it goes on. 2017, we made 20.3%, 168,000. Now you're happy again. 2018, gosh, we lost 14 point now. Now I'm only 143,000 versus 2013, 5 years ago. I'm only up 20,000. 2019, though, you made 24.6%. 178,000. Now we'll look at 2020 year to date. Maybe you're down 15%, Liz. Now you're back down to 151,000. The end of the year, you ended up flat, 178,000. This is terrible. I'm making no money. If you just look out another 2, 3 years based on those good years you had, like 2016, 2017, you go out to 2021. Now your portfolio is 196,000. So over about a 7-year period, you've made about 100,000, almost doubled your money. So you've got to look at the numbers and understand the numbers, not just panic when things are down, when you get punched in the face and said, like Mike Tyson said.
Yeah, I get what you're saying. You got to understand what you own and look forward 2 to 3 years. And that's why we have people like you, Brent, because it's so complicated and it could be scary, and we can get anxious when, if in fact we look at our investments right now. For someone like me though, like let's say I'm 20, 25 years away from retiring. Should I even be looking at my investments? Would you say yes, and maybe make some changes, or just let it ride?
You need to look at your investments to make sure you have good investments. Because again, when I talked about those returns, some years are negative, some years are positive. You have to understand what those investments are. But you want to make sure that you're not getting into things like, and I hate alternative investments. I've seen some very bad things over my 40 years of investing here where people did some crazy things. and they lost money. So you always want to understand your investments. I tell people it's best if you have a very good financial advisor that understands investing, and look at your investments about once a year. You don't want to look at them every day because it's going to drive you crazy, but make sure you have good investments. And again, go back about 5, 6 years. What have you done over that 5 or 6 years, and why? Not just what, but why? And do you see that going forward? Because people get this block that they're stuck here now with this loss and think that's going to go forward.
Yeah.
That's the biggest mistake investors make, is they get too focused on the short term. They get scared, and well, now I'm going to go buy Amazon. I'm going to buy Facebook because they're up. That's buying high and selling low. You don't want to do that.
That's good advice right there. I love talking to you, Brent. You know, next time I think I want to ask you, maybe for another day because we're running out of time, but you know, with so many people unemployed, or, you know, with the economy and the jobs the way it is, some people may be wanting to pull money out. We should have a conversation about what people need to keep in mind in terms of penalties and fees and all that good stuff, because I know I'm starting to hear a lot of chatter among friends and friends of friends who are starting to look into getting some of their investments out. So,
you know, Liz, that's a great idea. And one area to answer that is our webinar workshop that we're actually going to have on Thursday, August 13th. It's a webinar all day. They can see that on our website, smartinvesting2000.com. And maybe we'll talk about that next time we meet. We'll talk about how to take money out from your plans with the least damage that you're doing.
That's great. Okay, Brent, thank you so much. Appreciate it. Have a great Sunday.
You too. Bye-bye.